Now, time for the word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President and the host of Payne Points of Wealth podcast, Ryan Payne. Also with us is Adam Johnson this morning. Great to see you. Thank you for joining the conversation.
Thanks, Maria. Great to be here.
I want to look at oil in the middle of all of this global unrest. Take a look at prices right here, actually pulling back this morning at 73.13 on crude. That is down 0.2%. Adam, Gas Buddy finds 45% of gas stations in Florida's Tampa, St. Petersburg area are without fuel.
Amazing.
Florida bracing for Hurricane Milton's dangerous landfall tonight. Jefferies is estimating that Milton could cause as much as $175 billion in damage just for the Tampa region, $70 billion in Fort Myers. What's the impact? Are you watching this as an investor?
Oh, I sure am. And I think there are really three components. So let's break it down for people. Safety, supply, price. Safety. You just mentioned that an estimated 45% of gas stations don't have gas. That might be on purpose, and I'll tell you why. You can say to yourself, yeah, but these tanks are underground and therefore they're safe. Well, maybe not. When you have 150-mile-an-hour winds, you can actually blow off the top of some of the components of the gas pumps. So you might actually be better off emptying the tank so that there is no risk. So number one, that may be what's going on here. Number two, supply. You can start pulling, once the hurricane comes through and it's then safe, you can start pulling barrels from up north. The Colonial Pipeline skirts just past the north of Florida. You'll be able to truck gasoline back down and resupply very quickly, probably within 18 to 20 hours at many of those places. And then finally, price. You see price tend to spike, but it's very short-lived for the second reason I mentioned. That is that there is so much infrastructure, you can actually get new barrels to replace the old ones.
Well, I mean, do you expect oil to keep going higher?
No. No, I don't.
Do you think gasoline is going to get, I mean, look at this supply-demand situation with 43% of these gas stations without fuel.
That's a short-term phenomenon.
Okay.
You know, the thing about oil is it's a self-correcting mechanism. You know, we're talking about supplying just one specific area in one specific state. You can deal with that. That's an isolated scenario. But even in a much larger sense, oil is a self-correcting mechanism. You know, when prices shoot up to 100, every producer turns on the spigot because every barrel is making you so much money. That extra supply ultimately pushes price back down. When prices go down, it's the exact opposite. You know, if prices go down to 40 bucks, you start turning off the spigot. Well, that means fewer barrels are being produced, fewer barrels, lower supply, price goes back up. So it self-corrects. So oil, you rarely see oil go below 60. You rarely see oil go above 90 because of that mechanism.
Okay.
And the oil equities that I look at, you know, as an investor, they tend to do the same. They tend to trade in a range.
Yeah, and you talked about the most important oil companies from a money-making standpoint over and over again.
Oh, yes.
Yeah. I want to get your take on Google. The DOJ is indicating that it is considering a possible breakup of Google and the search engine business practices as an antitrust remedy. The breakup would prevent Google from using products like Chrome, Play, Android to its advantage of Google search. You know, interestingly, former President Trump weighed in on this when I spoke with him back in August. He knew apparently something was coming. Here's what he said to me in August. Watch.
Google has been very bad. They've been very irresponsible. And I have a feeling that Google is going to be close to shutdown because I don't think Congress is going to take it. I really don't think so. And Google has to be careful.
Now, obviously, there's no shutting down, but Congress is watching this closely. The DOJ is moving to separate.
Yeah, you know, I'm not crazy about that idea. You know, I really do believe in competition. And let's face it, I mean, Google does have kind of a monopoly on search. You know, they get more search than any other competitor out there. But that's starting to change a lot with this whole artificial intelligence. Like, if you start looking at Microsoft AI capabilities now, I'm actually using their browser just as much as I'm using Google's browser.
Really, Bing?
You use Bing?
Well, I think they rebranded the name, but it has Copilot, which I have to say is an awesome tool for artificial intelligence. Our copy, we use that now for my firm. So I think naturally they're going to start losing market share anyway. So when the government steps in here and now is looking to break them up, I'm not crazy about that as a capitalist, and I think that's going to actually take care of itself with the way competition is changing the landscape.
You made the point earlier on this that, well, what are they going to break up?
Yeah, 98% of their revenues at Google come from ad search. So What are you going to break 98% of the company away from the other two? I mean, I think it's sort of a convoluted approach.
Yeah, but I mean,
the
point is not to use the ad search capability with things like Chrome and Play and all this other stuff.
Well,
because it's giving Google the advantage, according to the DOJ.
Yeah, well, which is one of the reasons, Apple had to put Google Chrome on the phone next to Safari. Safari is Apple's browser. Chrome is obviously Google. Well, that's probably what we're going to see, where, you have to give people options. So on the Android phone made by Google, again, you might actually see a Safari, an Apple browser. Fine, okay, then people can choose. I guess it's about giving people choice. But to break up Google, again, when 98% of their revenues come from one product, what are you going to break it into?
That's a really good point, because they've been trying all these other things. Come up with your ideas, encouraging employees to do that. But at the end of the day, the money is in search, 98%. Let me ask you about rates. The 10-year Treasury yield back above 4% this morning. Ryan, look at this. Up 1 1/3 basis points right now at 4.027%. Gold price is on track for the biggest decline in more than a month, but of course, money has been moving into gold recently. And now there's lowered expectations for a large Federal Reserve rate cut. Atlanta Fed President Raphael Bostic said that the central bank must balance competing risks, and that while risks to inflation have come down, threats to the labor market have gone up. And then you had J.P. Morgan Chase Chairman and CEO Jamie Dimon said that the Fed was right to take its foot off the gas with cutting rates by 50 basis points last month. What's your outlook on rate cuts?
I think the Fed needs to back off. I'm really surprised we had that half-a-point rate cut last month. And, Adam and I talked about the labor market last week. We said don't bet against it. We were dead right. Labor market's extremely strong here. GDP growth just got revised upwards. It's tracking at 3.2% for last quarter. That's accelerating growth. Meanwhile, you've got every central bank around the world basically stimulating their economy. You had 21 rate cuts in September alone. Wow. The ECB is going to cut again next month. And my question is, you have an accelerating economy. You've got a strong labor market. Why is the government or the central bank stimulating the economy further? And I think what the 10-year Treasury is telling you is inflation is going to come back in a big way. A 10-year at 4% right now says that there's problems here. Bond vigilantes are out. I think you got to be really careful.
Sounds like you're not expecting another rate cut.
I think they're going to do it for political reasons. I mean, that's a provocative view, but I don't think they should.
Okay. Ryan, great to see you.
Thanks, Maria.
Thank you so much, Ryan Payne.